A man walks along the streets on the Lower East Side of Manhattan, heading toward the intersection of Broad Street and Wall Street. Holding his hand and keeping pace is his 9-year-old grandson. Young Daniel Frischberg is about to get a first-hand look at the New York Stock Exchange. He doesn't realize it yet, but his destiny is to be a major player in the world of finance. What he's learned over nearly 50 years, he'll teach you today, and it's all free of charge. There's a billionaire locked inside you. The key to freedom is information, the kind of information you find here on the Money Man Report. Now, here's the Money Man. Here's Dan Frischberg.
Good morning, everybody, and welcome to Money Man Report. I thank you all very much for joining me, and we're going to depart from what we usually do in order to have what I think is very, a very interesting conversation with an old friend of mine, Jose Domenico. He is not only a sophisticated investor, and many years ago took my highest form of instruction, a whole year of instruction, and trained as a professional investor. And I guess his only profession is investing his own money. He's not interested in doing it for you. And what's happening is right now on the weekends, they're full and they look great, 90% occupancy. It's a hotel, it's a bar, it's a club, it's gambling. But during the week, they're not getting the business travelers. They're not getting the company that, like your company, used to take you on if you were a top producer and an important guy, there would be an annual meeting for your company. I'm not going to mention the company.
Right.
Unless you want me to.
No, it's okay. You can.
You were a top executive at one of the most famous, gigantic companies in the world, global companies. But the bottom line is that you didn't. The stock went up, the stock went down, the stock went up, the stock went down. You didn't. The best thing that happens to people with stock options that work at a company like that is that they're not vested, and therefore they can't listen to people on television and liquidate and buy and sell and buy and sell. They're stuck.
Right.
And that's why people make money. So I think that these analysts cost people tons of money, have no real interest in you being rich. They just have interest in you staying with them. And if they don't say the right thing, their company will fire them. That company is there to get your fees. They want you to pay rent so that you can store your money with them. And if it doesn't go up right away, they think you're too dumb to have patience. And they care what they invest in, but they think you don't care what you invest in. You don't know anything about it. You're just guessing, you're watching a chart and guessing what people are going to do. I think it's a great conversation because a lot of the people listening to us, this is exactly what they do. And I would like to tell them that this is a trap. You're going to lose money. I have to stop for a little break, Jose.
Okay.
And I want to come back and I'm going to open it up by you giving me your thoughts on the stuff that I just said.
No, that's fine, Dan.
Sophisticated, very smart, top executive guy who's a very sophisticated investor, supports himself by investing his own money and supports himself very, very well. And we're going to come back in a minute and find out what does Jose think about what I just said. So stick around. We'll be right back. Now we're back on the Money Man Report, and I'm speaking to a good friend, Jose Domenico. And he has a history of being a top executive at one of the biggest companies in the world, a global company. And he's an investor who invests for his own account and is very, very smart and has a lot of knowledge. And go ahead and respond. If the people don't remember what I said, I'm not going to repeat it. They can go back and listen to the last thing.
No, that's fine. Let's just button up the discussion on MGM. being from a corporate background, I know that come January, companies are going to have travel and living budgets for business trips and expenses and conventions. So I know that part of the MGM and hotels and so on are just going to take off. And I know that there's just a lot of pent up demand. So these hotels and casinos are going to be busy 7 days a week, just like they used to. And in Macau, today, that's maybe 10 to 12% of their annual revenues, but they're investing to grow. So they're going to continue growing. And their online betting on gambling on games is understated. I think I would not. I mean, look at a competitor that they have that's trading at maybe $70 a share or $50 a share. So the fact that MGM can get that kind of valuation on gaming is also very achievable.
Right.
But then,
what about the psychological part? Because people listening to us are concerned about what the stock market's going to do, and they are concerned what those analysts say, even if the analysts really don't have a clue.
Well, you don't have to be like me and be a hog and say, I'm going to buy a 2-year leap on MGM using $100 strike price, and I'm going to make $500,000 if I invest $10,000. If I'm more risk adverse, I might say, okay, I'm going to pick a $75 strike price. I'm still going to make a lot of money, but not as much. But I reduced I increased the exposure or the probability of achieving that strike price. But one thing for sure is my mindset would be I'm giving myself enough time for the share price to achieve that target. So that's why I was thinking about 2 years.
And I want to add to that the fact that I think more like 4 or 5 years. Now on that exchange, they don't sell. We're going to stop for a quick break, give you a chance to breathe. There's a couple of messages, and especially for those radio programs that carry this program, we want to give them a chance to do the news and commercials. And then we're going to be right back with you.
You've heard it said right here. With enough leverage, you can multiply your investing strength and move mountains. So think about it. How'd you like to own companies like Roku or MasterCard or Raytheon and put down as little as 5 or 10% to unlock the treasure chest of unlimited upside gains? You can, all the while drastically reducing your risk, and you can do it with zero borrowing costs. You just need that leverage and a little know-how. So Dan Frischberg is going to allow you to pick his brain to better understand the concept of leverage. These are special online training sessions called the Pick Dan's Brain Option Service. You can use just a little bit of money to potentially make incredible returns. If you want to make real money, you owe it to yourself to take advantage of this once-in-a-blue-moon opportunity. All you have to do to try it is to go online and register so you can see the results for yourself. The cost is next to nothing, and look what's waiting for you. Each week, Dan will discuss a few detailed trades, quality, actionable trades. You get detailed instructions on buying and selling specific put and call options. The Pick Dan's Brain Option Service shares specific underlying stocks, expiration dates, strike prices, and shows you how much money you could make instantly. It's Dan Frischberg's time-tested, proven money-making discipline that he's used for 50 years to make himself and a lot of other people rich. Lots of other benefits are waiting for you, too, if you just register at themoneyman.com. That's all one word, themoneyman.com, for the Pick Dan's Brain Option Service. This is about teaching you the knowledge and skills. It's your responsibility to apply these skills and knowledge to your specific situation. It's too much to detail here, but all the info is right there at themoneyman.com.
You're tuned in to the Money Man Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
Welcome back to themoneyman.com. Thanks very much for sticking around. I want to continue this story, the rights to go out for 4 or 5 years.
Right.
But I can buy the 2-year one for $3, $4, something like that. If I'm going to buy a company and the company is going to be worth $100 someday or $75, and it's going to be worth $100 3 years from now, 4 years from now, 2 years, 5 years, I don't really know what the answer is. I do know that if my $3 gets dissipated because it doesn't happen within 2 years, a year before it expires, I can trade that in and maybe pay another. What's the difference if my investment per share was $3 or $4 or $5 per share when I end up eventually selling that stock for $100 a share? And so I don't really care about the timing. It's a 2 years. I wish it was 5. I would buy it, but I would rather buy the 2 years because I can get it.
Right.
And then a year from now, I'll look at it. If I need more time, I'll spread it out another year or two. And it will cost me maybe another $2 to do that, or $3 per share.
Exactly.
So time is not really a problem any more than it is for your house or your business or anything else that you own. That time is an artificial constraint that's made by the incorrect way that people look at the stock market.
Well, it's just psychological.
Yes, it is. But my grandfather told me when I was a kid, making money is the opposite of human nature. So if you do things that make you feel good immediately, you're going to be very lucky if you end up rich. That isn't the way it works, because rich people, the big difference between them and poor people is that they use the left side of their brain, which calculates and makes lists and calculations and statistics. They use that part of their brain and they make intelligent plans using what they expect to be happening. Especially businesses are pretty easy to forecast. If you have a business that everybody likes and wants and needs and uses it, it's pretty easy to forecast what's going to happen with that business. I can't tell what's going to happen with it this month, but I can tell that building is going to be worth a hell of a lot more when it's full than when it's empty. I know that. And if I can buy it when it's empty and everybody's worried about it and the analysts say it's no good and it's going to be, that's when I'm interested in it, because I know it's going to be worth a ton of money 3, 4, 5 years from now.
Right.
Your thoughts?
Well, no, I think that's exactly right. And related to what you're saying now and before, if I digress and reflect on my career, I made my wealth having concentrated positions in the stocks of 2 companies. One was General Electric, when General Electric was GE back in the heyday, and the other one was in Rolls-Royce Energy. And so I made my wealth there through restricted stock units and so on. And if I think about the marketplace, a lot of people that are billionaires also made their money having concentrated positions, owning a business that they IPO'd or they sold and so on. I think if you listen to the analysts and they say, oh, diversify, sure, you can live comfortably if you pick the right stocks or the right investments, but you're not going to become a billionaire unless you really start thinking along the lines of the MGM discussion, leveraging a small amount of capital that you're going to invest to control a much larger number of shares. And I think that's, if you do the homework, that's how you build some wealth in the stock market. But you have to do the homework and you have to work to pick the right companies, because if all you do is go pull an analyst report on company X you're probably not going to see the opportunity.
By thinking of them as a business rather than as a trading card, you already are way ahead, because you can have a much better idea of analyzing what a business is likely to produce over the next few years than to guess what those investors are going to do. And I think that's what happened. You happened to work at those companies, so you got them automatically. It didn't matter what the newspaper said, what the television said. You got them automatically because that was part of your compensation. And fortunately for you, you were not allowed to trade them. You were invested. Right.
Now, Dan, the other observation is that we have, we're living in a period of really easy financial conditions, and everybody's a genius. It's almost like throwing Jello on the wall and it sticks, because all stocks have been going up and up and up. And I think that the likelihood of financial conditions being easy for the next year or two are probably going to remain, unless there's some event. Even if the Fed starts cutting back on the bond buying, it's going to be gradual. I think any increases in interest rates will depend on the economic growth in the U.S. and globally at the time. I don't see a world of 10% GDP or 5% GDP on a long-term basis. We might get that for a couple of years, but then it's going to start trending back down to, in the U.S. to the 2% range, or maybe even slightly lower. And if that happens, it's going to be difficult for the Fed to really increase rates. So what I'm saying is, don't be scared. Take baby steps as you go, and just keep the eye on the eyeball. But I think times are good, and they're going to continue to be good for the foreseeable future.
I love the fact that this is not a guy that's trying to sell you on managing your money. He doesn't work for any of those brokerage firms. He doesn't want you to pay him anything. He's an individual investor just using common sense, but he's got many, many, many years of experience in business. And that is exactly the right equipment for what we all want to do. Jose Domenico, I'm out of time, but how wonderful it is for you to give us this gift of spending time with us.
Thank you, Dan. It's a pleasure to be with you.
Good. Okay, I'll see you very soon.
Thank you. Bye-bye.
You've been listening to the sound of your money growing. This has been the Money Man Report with your host, radio and TV money man, Dan Frischberg. Hear it again every weekday morning here on Bradenton's WWPR, broadcasting worldwide. It's Better Living Radio.